Hey, so this is the recap for August 20th, Wednesday. Don't risk any money you can't afford to lose. And today we only took 3 trades. I mentioned yesterday I was sick. Woke up about 9:30. Got online about 10 o'clock. Saw that THAR had been moving up earlier in the day. I had been sleeping for about 24 hours on and off, waking up just to do the natural things. But I was looking at THAR, and at 10 a.m. when I looked at it, I really didn't like it, even though it had that nice green bar up there a little earlier. Um, but then I started to take an interest right around 10:30, and so I'm watching it, and I'm thinking that there's a possibility there. So on that green bar there, I jumped in 249, only 100 shares, and at this point, the pattern and the way the market was shaping up, the way that there wasn't anything else out there, it sort of told me that perhaps this stock would pull up right into the close. So it's 10:24 Pacific, so I'm thinking 11:30, 12, this stock is going to go up higher. And my thought is to hold it. So that's why I went in at 249, thinking that it will hold. And it's a long hold, I think, at least anyway, waiting for that spark to go up. And I wasn't going to be satisfied with just a few bucks. I was expecting a lot more out of it. I thought it had quite a ways of room to go up. I only had a few lines marked, and it's something that happens when you come in late. You're thrown off your game. You're not really there. So it's a danger. Some folks totally avoid trading after the market open, a couple of hours after the market open. It seemed to me, like listening to the news, that everybody was on hold for something, that the entire market was waiting on what was going to come out of the Fed meetings at 11 o'clock. And I thought, well, whatever's going to come out of the meeting, out of those notes, is not really going to matter. All that's going to happen is it's just going to reiterate what we already know. The economy is showing some seams all over, and we can't expect more than one rate or cut, or maybe none. So I think that the market's waiting on a reality check here prior to the release of the 11 o'clock minutes from the Fed. I cut a lot of the quite a few minutes out of there just to jump ahead. And you notice there on 1040, and then the volume just stops and dies. And now my thought is, well, if it's going to hover around 237, I should buy more. But at the same time, I have a family luncheon to go to, and I have to be out probably before 11:30. So I couldn't watch this. And that move right there, where I sold, it told me I couldn't hold this. It wouldn't be a smart thing to do so. So we got out. And then I still had some time, so I kept looking. And NBY that was there, it had been at 98 cents, hovering. This wasn't a stock that had any of the signs of being my setup, and I didn't think that it had good momentum or an opportunity to really make money. But lo and behold, with just 400 shares, it was moving well. My mistake, I think, coming into the at this hour is the fact that I'm waiting for more, and I'm waiting for uh, the market to have a little bit of an explosion or realization that what happens at Jackson Hole, whatever the Fed is going through, is not going to matter anyway, and that they should begin to trade and they should get back on their horse. Um, because in this trade, this was a long trade, and there was a couple of opportunities where I could have gotten out with a little bit money and had a green day for the day. Being sick is not an excuse. I mean, if you're sick, just don't trade. Here was one opportunity. We hit 16 on the profit there, run 15, 16. And it would have been a good place. You're right below the VWAP. You could possibly expect a reverse down. Look at that. Now we're at 22, 27. Right there should have been a flatten. Get out with 28 bucks. You lost 15. You would be up plus 7. But the increments were so low, I was thinking that this had an opportunity to go to 111 and beyond. And only because we were heading towards the closing, and the other stock had dumped all the way below 237. So I said, well, people might jump back on this one. But you can see there are sellers, 1302. Huge wall at 107. And we kept eating it up, and the wall moved to 108, and it got reduced. And so this was basically a game of chicken right here. You look at how many bars, 1, 2, 3 bars had hit the VWAP there. And I think I've mentioned in all my other videos is not to get greedy. And it's one of the hardest emotions to get rid of. That is one of the biggest reasons why I lose is because I get greedy. Instead of taking what's there, I get greedy, then I wind up holding, waiting for the next reclaim. And it's a bad habit to get into. The other thing is, we're thinking $8, 15 bucks, 20 bucks is not that much, but it adds up. You lose 20 bucks, 10 days out of the month is $200. So it adds up. So you can't think of those terms that anything under 10, under 15, under 20, it's an inconsequential amount. It is going to add up. And the importance of journaling your trades will show you your reports. The things that you should look up is what is the amount of your winners versus the amount of your losers. If your winners are less than your losers, then obviously you're going to lose money overall, even though you may have some good winners. So it's important to track your trades, what you win, what you lose on a daily basis, and then go back and look at those trades. You could have a 70% win rate, but if your winners are less in dollar amount than your losers, you're not making money. And by the same token, you could have a 40% win rate, but if your winners are bigger than your losers, you could be on the winning side. So you cannot just take one particular stat and hang on to it. By other factors as well, you shouldn't dive into the weeds and look at 150 set of statistics to find out where things are going wrong. That's worse, because you're going to fill your head with numbers. And at that point, if you feel that you're not making progress, that you're not uh, uh, holding your head above water, what you need to do is go back to the basics. Reduce your size way down, instead of like me here, incrementing it, thinking that we're going to go way back up there past the VWAP. Reduce your share size, reduce the number of stocks that you're watching during the day, and be more selective. You just have to constrain it. And only after you've done 10 trades in a row, even if you lose one or two that are good trades, that you feel were good trades, that you could have made money, then you could start easing up on the share size. But here I'm feeling confident, because we were able to recover the month of August, and we were up $177. I think we're probably up only about $80 on the month, and that's what I'm playing on. So quickly skip ahead. We wind up with $32 losing. I still had some time, so I went back in on THAR, and this time it had picked up again, and I jumped in at 259. And like I said, here I'm about 15 minutes away from leaving the house for family luncheon. I didn't want to be disrespectful, and I need to watch my mobile all the time. So I decided not to hold, and I think I spent a lot of my cash on NBY. So I think this is all I had left. So my idea was to hold 200 till 1 o'clock p.m., which I should have. But hey, those are the breaks. But we get a good move here. Remember to like and subscribe. Leave your comments, questions below. And we jump ahead a few bucks. We wind up making a little bit of money, and the day is not too bad. Not all lost, only $10 down. Have a great day.